Hello everyone, Shah here. So I wanted to talk about risk appetite because a lot of people are confused where they should enter into a project and when they should leave. They don't know, even when they're profitable, they're confused. Is this good enough? And they sit with it and then they don't take profit and they end up making a loss. Or when they are in a loss, they're not able to stop the loss and get out of it just because of the fact they don't know whether it's good for them. And the reason for it is basically identifying risk appetite. You need to know among these three categories that I'm going to share with you, which one are you? The first category is called risk averse. The second is called risk neutral. The third one is called risk seeker. Risk averse is a person who doesn't want to take much risk. They want to play it safe. If you want to look at it from the perspective of banking, these are the people who like to invest their money in RRSP, in savings account and those kind of things because they don't want to take high risk. Risk neutral are the people who are willing to take a bit of risk, okay, but not so much. A medium level of risk. If you want to look at it from the perspective of investing, these are the people who like to go for mutual funds. Why? Because mutual fund investments are generally a pool of shares and it's not share of one company. So basically the concept is that as it is diversified portfolio, it kinds of mitigate each other's risk because you expect that mutual fund manager to use IT sector shares, EV shares, with other shares related to soap and food and other categories that has nothing to do with EV or IT. So it neutralizes the overall portfolio and it gives you a balanced profit. But of course, it's more than your savings account. So that's your risk neutral. The third category are the people who are risk seeker. These are the people who will buy one share solely just because they want to risk it. And for example, it's like 2020 when I was buying NEO. So NEO was around, I think, $2 and it went up to $48, but of course it could have gone to zero as well. So that is basically how you identify what kind of risk appetite you have, who you are. Only after identifying what you are, then you can decide what kind of crypto behavior you should have. And after identifying who you are and what is your risk appetite, that will give you an entry and exit in crypto. And it will also help you whether you want to invest in that form of crypto to begin with. So for example, if you are a person who is risk averse, they will never invest in Shiba. They will never invest in projects that have case going on like XRP, where you have SEC sitting on your neck, or BNB now, where you have SEC sitting on your neck. You would go for projects that have no problem attached to it. They have good utility, good promise, good future. You have fundamentally studied it, the team, the project, everything looks fantastic, and you would go for it in this space of crypto. But when you talk about risk neutral, you would be a person who would be willing to take a bit of risk but not much. So what you do is that you would go for a lower market cap, not price, lower market cap project that would be riskier. So in the previous example, you were risking the market cap, you were risking the lawsuit, and you were not risking the market cap or anything. So when you are risk averse, you would be going for projects that are above 1 billion and they have no problems whatsoever, 1 billion of market cap. But when you are a risk neutral, you would be a person who would be willing to go below $1 billion and you would be willing to invest in projects that are above 100 million, but they are below $1 billion. So you want to invest in these projects that has no problem whatsoever. They're great and they are under 1 billion. So that is risk neutral. But when it comes to risk seeker, you are talking about people who are willing to get destroyed because they're looking at high risk, high return kind of thing. Of course, people always think of high return and they don't think of high risk. So these are the kind of people who are seeking risk and they will go for BNB, they will go for XRP. They say it's okay, SEC can destroy them and I can lose all my funds in one night, I'm okay with it. The thing is that they have that kind of risk-seeking mentality, and these are the people that will generally go for projects where they have huge potential, and they are the projects that are usually under $100 million market cap. Of course, BNB and XRP, they both are in billions of dollars, but they have SEC case, which can bring them to $10 million just like that. I mean, it can go to 1 cent without any problem, because if you have a case and it declares you into something bad and bans you out and you are a legal entity, it's pretty much over for you, right? So the thing is that if they are going for a project that has no legal case going on, then they will go for a project that has a lower market cap because they are looking for a higher potential. They would be looking at projects under 100 million, and they might even buy a project that is $10,000 market cap, which is basically shitcoin space, because they are risk seeker. So you need to identify what kind of a person you are. Only after identifying what kind of character you carry, then you would know what kind of investment decisions you should make. And if you are not clear on it, you are only going to make bad decisions, because you will be using mixes of all the worlds, and that is only going to lead to disasters. So I hope you understand, and please educate those who are around you so people could take more educated decisions instead of going blindly hoping things will work out, because they will not.